almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is
That
behind
has,
this? Like, who's the they in the market makers and they got hit? Who's the they?
well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error.
Liquidity is the word of the day, and this day started with 99% of investors in long positions being wrecked by market makers. This liquidation map alone pointing out virtually no long positions opened and all short positions, so heavily skewed in the direction of short positions that it's never been witnessed before. In the early hours of this morning, this chart represented $400 million in long liquidations and $12 billion in short liquidations, and that was only up to about $102,000. Retail panic selling ensued upon the visibility of major institutions dumping like Wintermute, BlackRock, Grayscale, Coinbase, Binance, and more. Over $10 billion of Bitcoin dumped the price down to $82,000. And the question remains, how much lower are we going to go? By the time you see this video, this meeting will have already taken place, but it was by no surprise that major bank heads from across the country pushing pressure on the Fed to call an emergency meeting at 2 p.m. Eastern Time today. The topic at hand is liquidity. Whether there will be more money injected into the system still remains to be seen, but that would be majorly bullish for crypto. We're going to hear more from Tom Lee a little later on in this video to understand how this may actually just be a remnant from the October 10th flash crash, how understanding what actually took place that day can reshape the future of crypto forever. So again, we ask, how much lower will we go? We're going to jump into the charts, some technical analysis a little bit later on, some strategies to hedge a protection. Again, it's not financial advice. But before I share all of this and more epic breaking crypto news with you, give me a comment down below. Comment 777 if you're still bullish on crypto and you're still ready to be that first millionaire in your family. Smash that like button, hit subscribe to affirm it, and let's run into the video. Welcome back, Bull Runners. I'm JR, your favorite crypto dad, and Ash Crypto on X pointing out the general sentiment here that cartels have liquidated virtually all Bitcoin long positions. From a volume and liquidation perspective, it looks like the final capitulation. The good news is that following that, we'll bottom out for a bear market and reverse to the upside. The question is, how soon will that take place? Well, maybe sooner than we think. Again, this isn't financial advice, so don't go running out and buying Bitcoin or placing long positions just yet, right? We want to do our own research, do our own due diligence. It's for informational, educational purposes. But when we look at CoinGlass, at the liquidation map, the earlier map that I showed at the beginning of this video showed barely any long liquidation leverage. And you can see that we're all the way back up here into the $600 million range. Trend looks to be reversing. We're going to jump into the charts and take a look in a moment here. And the sentiment on X seems to be reversing as well. Every Bitcoin long got liquidated, no more liquidity below 82,000 as we saw earlier today. RSI dipping all the way down to 13, extremely oversold. And thanks to Bitcoin LFG on X, we see that the last 10 times Bitcoin ran down to an RSI below 13, it pumped over 200%. Historical patterns can be a possible indicator for future performance, and if that's the case, maybe some people like JP Morgan and Grok are right, and we'll see $170,000 Bitcoin by the end of the year. But what caused this whole scenario to play out? What caused the market makers to get so wrecked that they had no liquidity to continue to move this market? Let's listen to what Tom Lee has to say here in this interview, as it paints a completely different picture than most analysts have been looking at, just simply looking at chart data over the last 6 weeks.
I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading. And if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Brian, it is. For instance, in 1987, portfolio insurance was the, quote, glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous.
So what do you think? Leave your comments down below. Do you think that we've reversed, that we finally bottomed out, we got a little bit more to go, or that we're about to start pumping into a new Bitcoin all-time high? Well, Tether just bought the dip with $1 billion of its own money. For the first time ever, they used $1 billion USDT from their own treasury to buy Bitcoin. My question to you is, are you cash heavy and are you buying the dip? And if not, what are you doing to position yourself differently? Our members in the Altcoin Pro University have seen losses just like everybody else, but not nearly as bad, most of them self-admitted, if they hadn't been in Altcoin Pro University. Again, it's not financial advice, but guys, the link is down below for APU. We're going to talk about it a little bit later on in this video, especially those who are looking to learn how to day trade and how to get into day trading. But let's jump into the charts, take a quick look at CoinMarketCap before we start. And a quick refresh shows that we are at $2.86 trillion in the total market cap for cryptocurrency. That's actually been moving up slightly just in the last few hours. Fear and Greed Index is sitting at an 11. That's a great place to be because once we go to the bottom, the only place to go from there is up. Altcoin Season Index is sitting at a 25. Altcoin market cap is down to $1.2 trillion. Let's jump into Bitcoin first. I want to point something out on Bitcoin with reference to historical patterns. And again, it's not financial advice, simply informational and educational. And these are my charts, not your charts. So do with them what you will. But when we look at the pattern of Bitcoin over the last year, we ran up for an initial high, a retracement, and followed off with a new all-time high after that. We can go back and we can see all of our chop before that, and we can look at the last cycle 4 years ago. We've still been on these 4-year cycles, and we did the same thing in 2021. We made an initial high, retracement, and a new all-time high after that. The question is, where do we go from that new all-time high and we get into our capitulation, our period of complacency where we start to actually fall down? Well, we landed exactly where we would have expected to land, which was to the mid-cycle high-low, right? We saw that was right around that $30,000 range. But then there was this big drop from here. Now looking at historical patterns, many ask, what's to stop us from having that big drop again? If you look at the time frame on this big drop, this is back in June of 2022. What took place back then? It was the Black Swan event of Terra Luna with their Anchor protocol and their depegging stablecoin. That's what caused us to drop below a very stable area of support. There's something that's different this time around that we didn't have back then, which was a significantly higher involvement from institutional investors. And so while we bring this chart back down, we see that we ran down and bounced right off of the mid-cycle high-low that I had just mentioned, just like we did back in the 2021-2022 cycle. So many people are expecting this to be the area that we bounce from. If the institutions are still in and they're still heavy and they're not that much underwater, they're likely not going to liquidate any further from this point. And that would be exactly where that bounce took place this morning in the early hours of the morning, right around that $82,000, $81,000 Bitcoin, depending on the chart that you're looking at. If you're fearful that we're still going to go down to the downside, many are asking how much lower could we go? Well, I mentioned this in yesterday's video. For me, I'm a big fan of looking at 1100 moving averages, and that's this blue line you guys see right here. It's going to take us down to about $73,000. We were looking at about $72,000 to $74,000 for a low. That's my prediction if we break to the downside where we'll bounce from. And I do believe that if we go down there, it will be a very clear and decisive bounce pattern, and we will run up to start a new run to the new all-time high. So the things that I'm looking for are going to be the Wolfpack indicator turning to bearish, turning red on the daily. It's already been there on the 4-hour. If I jump back into that, we'll see that we have bearish right there on the Wolfpack. But at the same time, we're also well below that 1100 moving average. So what I want to see on the daily, I want to see the 1100 touched. I want to see it bounced off of. I want to see the 1100 cross over the 50 moving average and create that bearish divergence. And I feel if we do get there, that we're going to end up reversing and taking off from there. That's Bitcoin, and that's where we're at. And if we don't go down there, that means that we're already in this bounce at the time of the recording of this video. Now for me, if I really want to get a handle on things and I want to see how involved retail is, because that's where the money's ultimately going to come from, I'm going to start to look at Ethereum. And then again, we'll also jump down here at all the other cryptocurrencies against Bitcoin. Looking at Ethereum, we've very clearly bounced off of that 1100 moving average on the daily. Yesterday, I think we were just about right to it. We weren't quite touching off of it just yet, but we have bounced off of that. We're bullish on the Wolfpack indicator on the daily candles, and we have bounced off of the 1100. To me, that indicates that the bottom is in for Ethereum. Again, this is not a price prediction. It's just simply using tools like the 50 and the 1100 EMA and the Wolfpack to show bearish and bullish divergences. And with that being said, I think the bottom's in on ETH. And I think that the confirmation for that would be when we look at all other cryptocurrencies against Bitcoin, excluding the top 10 majors. And this is an indicator that has shown us clearly that retail hadn't even entered the building. I'm going to zoom out and show you guys this really quickly here. Again, we're well below the 1100 on this one, but this downward trending resistance that we had not broken past goes all the way back into 2022. I mean, look how far back this downward trending resistance goes. For all other cryptocurrencies against Bitcoin, that means that this is retail. This is an indicator of retail involvement. And the reality is, if you're watching this video, you're probably one of us crypto degens that's been around for the last 4 to 8 years. There's not many new people coming in, right? We're not mortgaging mom's house or getting a reverse mortgage on grandma's house to invest in Bitcoin or Shiba Inu or XRP or any of that stuff right now. That just hasn't happened yet. We never saw that in the 2025 cycle. So for me, retail hasn't even entered the building again, like I said, but this is a very strong indicator that they are starting to warm up, or at least we're starting to see some rotation from majors down into lower and middle market cap, meme coins, gaming coins, junk coins, NFT projects, etc. And just as recently as November 7th through the 10th, we saw this little bull flag starting to break out. And it did. And it broke out of it, riding above that 50. And again, we've got the 1100 way up here. We've still got to cross that. So our wolf pack is going to be bearish for right now. So I'm looking for the wolf pack. I'm going to start going back on the 4-hour and 1-hour chart and even 30-minute charts. I guess we don't really have that much volatility to worry about right now. When we look back at the 4-hour, we're looking for this cross to take place, right? And so this is going to be the 50 crossing over the 1100, which is going to signal that we have a bullish divergence. So again, we've broken out of this little bull flag. It's given us some positive sentiment. The other more retail heavy aspects of cryptocurrency. So to me, it signifies some retail strength, some retail hope. Again, we've got to see these institutions open up the floodgates, and I don't think we're going to see that until we see something like the Clarity Act passed. But in the meantime, I'm watching Bitcoin to run down. If it breaks to the downside anymore, $72,000 to $74,000, I'm looking for the bounce there. I'm looking at XRP with the ISO 222 protocol taking place this weekend. I don't expect that to be a buy the news event for XRP and XLM and Hedera and all them to start blowing off new all-time highs or anything like that, because this is simply the messaging that will be adopted by institutional banks around the world. ISO 222. That's not the liquidity provider that we're talking about just yet. It doesn't mean that it couldn't have an effect on it. It could absolutely have a positive effect on it. But when we look at XRP, we've held really good support off of the mid-cycle high-low. So I'm pretty confident right now that we're going to continue to chop sideways from this zone that we're in here. And then again, we're going to have to start breaking past new targets, $2.17, $2.61 as we move our way back up to the top. Should we break to the downside? I'm looking for $1.50 to $1.65. Should we break to the upside? We've got weaker areas of resistance than the support that we have to the downside. Leave your comments down below. When did you buy XRP? At what price did you get it? Would you get in at 35 cents, 55 cents, or did you buy in at $3 and you're underwater right now? Have you bought 4 years ago? 8 years ago? Have you found a way to make that money work for you yet? Or are you just happy with just holding and sitting and waiting? Well, many people are coming to us and asking, how do we make money in the markets no matter whether they're going up or down or sideways? And that's where we first divert everybody's attention to Altcoin Pro University at the link down below. And that's where you're going to get your true education. But while you're down there, you're going to see another link for Breakout, which is a prop trading firm that currently we've partnered with, giving everybody the opportunity to trade with a much larger account than they would have been able to get their hands on by simply taking a small test and passing it. If you haven't found a way to make money in these markets when they're going up, down, or sideways, and you're sick and tired of just sitting on a bag of something like XRP and waiting for year after year after year for this blow off top to happen that still hasn't happened, I've got one other question for you.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a $100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click Start Trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.